Welcome back to the channel. Brad, just finished up my sweet tea session, but I said I was going to make a video on EOS and EOI because a subscriber reached out to me on my sweet tea and bought me, a little episode. So it's really not a paid promotion, but he did pay me, so I'm going to give you my thoughts. And this is going to be a lot less formal than other videos. So it is what it is. So here it is. EOS, in a nutshell. Here's the holdings. 47% technology. That's a lot of holdings in technology. And could also mean a big downturn if technology goes down. Because normally they take the biggest hit first. Financials, just covered that in my sweet tea. They're up. All right. So got to look at how this is all playing out for EOS. But when I look at EOS, they're paying 8.2%. They're doing cover calls. And they've been doing this for 20 plus years. Now, I haven't done the back testing. I'll just go ahead and tell you I haven't done it. But they've been doing this for 20 plus years. Right now, on Seeking Alpha, everybody's calling them a hold. So if you're into these funds already, I would not be selling them whatsoever. That's my personal opinion. And that's what the person wanted to know. What was my personal opinion? EOS, would not sell it. Would I buy it today? Probably not. I think the market's a little overheated. I'm going to be focusing myself more into alternatives over the next few months because I think the market's overheated. I'm keeping I got it. One more full disclosure again. I'm keeping everything that I have. I'm not going to put a whole lot more money into the S&P 500 and everything in the NASDAQ. I'm not putting money there. I'm going to do alternatives. SFAL is one alternative. I'm going to be doing CLOs, another alternative, right? I think the market is overheated and I'm going to move to alternatives. But getting back to EOS, great funds, no question about it. CAGR at 6.8, that's their growth rate, compounded annual growth rate for 5 years. Great funds, 8.2%. Look at the companies that they hold. That looks like any other fund that's out there for growth, right? That's your NASDAQ, right? Apple, NVIDIA, right? Great fund. Nothing wrong with it. Meets all my criteria. And it's been around for 20 plus years. So this isn't a newcomer to the season. This isn't Jeppy with only 5 years and everybody's like, ooh, here's a fund, a closed-end fund that's been around for 20 plus years doing these cover calls. And, oh, by the way, cover calls are going away next year. It's just a fad. Okay, people. There it is. I mean, you can't make this up. If I look at the chart, and I told this is a sweet tea version. If I look at a chart and I see EOS at 41% and the S&P 500 at 35%, they're beating the market on the 1 year chart. And I compared it against Jeppy in JEPI. You can just see how much more they're above the market. And they're paying you that 8%. Nothing wrong with there. I took a 5 year snapshot. All right, here's you getting out to where Jeppy and everything. Again, 5 years. They're a little bit below the market 5 years on EOS. But they're paying you that 8%. So I went out to a 10-year chart on EOS. And they're beating the S&P 500. And remember, this is a company that's paying you, or a closed-end fund that's paying you these distributions. So they're giving you income also. Income first. Capital appreciation second. Again, it's something that, if the market wasn't so hot, this might be something that you should be looking at. Great funds. If you hold them, clearly a hold. Do not get rid of these funds to get into something else. These are killer long-term funds that maybe you should have had 20 years ago. Probably should have had them 20 years ago. I'm just going to put up real quick what these guys are. They're, when I look at the EOS, which is the Eaton Vance Enhanced Equity Income Fund 2, closed-end mutual fund. Their benchmarks really are the Russell 1000, CBOE, S&P 500 Buy Right Index, CBOE, NASDAQ 100 Buy Right Index. That's what these guys are. And it's founded in 2005. 2005. So 2008, right? The pandemic, the 20% drawdowns in 2020. These guys have seen it all, and they're still paying. And so all I want to say is great funds, great management, long-term hold. Wish I would have known this 20 years ago, but I didn't. And again, I think the market is a little hot. Maybe get something like this on a drawback. Nothing wrong with this at all. The Eaton Vance Enhanced Income, its benchmark is against the S&P 500 index. And I couldn't really figure out where they're getting the income from, but they're still paying you 7%. So there's probably a little bit of, return of capital, but they're, definitely being offensive given that. And what I saw on the charts, they're still outpacing the S&P 500 for total returns. So you just got to sit back and go, they're doing something correct to be able to do this. EOI, right now the forward yield is 7.91. EOS, 8.20, right? EOS, $1.2 billion in assets under management. I can't complain about that at all. EOI, $833 million. Another great big fund. But if you look, they're very close to the 52-week highs. That is what's concerning me about the marketplace today, is everything's getting up to that 52-week highs. I'm going to wait for a little bit of pullback before I continue to invest in equities. I think alternatives should be really, if you have any income right now. Now, if you're DCAing, everybody's different. I'm just telling you what I'm doing. EOI, 10-year chart, 218% against the S&P at 198. And they're paying you that 7%. Again, I didn't do the back testing, but seeing the chart, you're going to be able to pull off your 8% and live comfortably. And I would say you would live comfortably at night holding these funds. If you're in them, hold. Do not sell to go get into any of these other funds. That's a personal opinion. If I compare EOI, and again, this is a sweet tea version, so I am looking at my screen. I'm going to try to memorize any of this. On a one-year chart, clearly EOI is leading the way. The chart is the chart. Total returns. Again, Seeking Alpha. If you're not a Seeking Alpha member, link below. Go get a subscription. All this data is there for you. It makes your life a whole lot easier. Or you can continue to listen to me forever, and I'll just continue to do me, and you can do you, and I'll get to the funds whenever I get to the funds. But EOI, definitely a long-term hold if you're already into it. Now, one thing I said on my sweet tea version, other episodes someplace, I might even put a card in. I know I don't do enough cards. I'm going to put a card in. You need to make sure that you're buying them when the NAV is above the price. That is my comment. The NAV has to be above the price is when I would be buying these. Currently, the NAV is above the price. I am going to leave a link below to give you the resource so you can type these in to see how much the NAV is above the price. So don't come on a video and say, is the price, I'm not your advisor. I'm trying to educate, trying to have some fun, but I keep on getting a lot of comments that just bog me down from doing other things. And I got other things to do, like play with my dog this afternoon. You don't care if I'm playing with my dog, but I want to play with my dog. My dog needs to be played with. We're going to go to the park. She's a great dog. She is. Best friend. Okay, my wife's my best friend. 29 years later. Still a good friend. Anyway, EOS, EOI. Hold. Best thing I can tell you. Do not sell these funds. These are things you can sleep at night. And if you're interested in them, hopefully this was a little bit of education of what they are, how the long-term performance has been, and you can make an educated guess of what they're going to do in the future. But nice funds. I hope these are how some of my other funds look like 20 years from now. Until next time, God bless, and hopefully this was educational. Have a great weekend.